Get ready because the news cycle is absolutely exploding, and we've got the inside track on what you need to know. The world of tech, finance, and beyond is moving at lightning speed, and if you blink, you'll miss it. Today, we're diving deep into some seriously game-changing updates that are set to shake things up. From massive market shifts to groundbreaking government initiatives, we've got it all covered. You're not going to want to miss a single second of this. First up, we're breaking down the latest on Oracle's stock performance. Are we seeing a stable foundation or some serious turbulence ahead? We've got the full analysis. Then, get ready for a seismic shift in the AI trade. We'll explore why a major player is taking a hit and what it means for the future of artificial intelligence investments. Is the hype cooling down, or is this just a temporary pause? Next, we're heading into uncharted territory with a look at how the US government is embracing blockchain technology and what that means for specific tokens. This is a major move that could redefine digital asset adoption. And finally, we're digging into the world of commodities as a significant royalty agreement is amended, potentially unlocking new opportunities in a critical mineral market. This could have ripple effects across industries. Stick around because you're about to get the essential intel you need to stay ahead of the curve. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. Oracle stock, navigating mixed signals. As the market constantly shifts, understanding the fundamental health and technical trajectory of major companies is crucial. Oracle, a titan in the technology sector, is currently presenting a complex picture for investors. While its underlying business fundamentals appear to remain robust and stable, the company's stock is experiencing significant volatility in its technical indicators. This divergence between solid core operations and fluctuating market sentiment creates a challenging environment for analysis, leaving many to question the true outlook for Oracle. Market observers are closely watching Oracle's performance, noting a fascinating interplay between its established strengths and the dynamic forces shaping the broader tech landscape. On one hand, the company continues to demonstrate consistent operational performance, suggesting a resilient business model capable of weathering market fluctuations. These stable fundamentals provide a bedrock of confidence for long-term investors who prioritize consistent growth and dependable earnings. Oracle's ability to maintain its operational tempo amidst economic uncertainty speaks volumes about its strategic positioning and market relevance. However, the technical side of the equation paints a more turbulent narrative. The stock's price movements are exhibiting a degree of choppiness, influenced by short-term market sentiment, broader sector trends, and potentially even speculative trading. These technical signals, while not necessarily reflecting a deterioration of the company's intrinsic value, can create significant short-term price swings. For traders and short-term investors, these fluctuations present both opportunities and risks, demanding careful attention to market timing and risk management strategies. The technical analysis often acts as a barometer for immediate market perception, which can sometimes diverge from the long-term fundamental value. This duality means that Oracle stock is a subject of intense debate among analysts. Some focus on the enduring strength of its business, predicting a steady upward trend once market sentiment stabilizes. Others highlight the technical weaknesses, cautioning about potential pullbacks and the need for a more conservative approach. The recent performance, characterized by these mixed signals, underscores the difficulty in forecasting short-term stock movements. It's a classic case where solid company performance is being buffeted by the more unpredictable currents of the wider financial markets, making Oracle a compelling, albeit complex, case study in current stock market dynamics. What does this mean for the average investor trying to make sense of the market noise? It suggests that a deep dive into both the company's financial health and the prevailing market sentiment is more important than ever. The market is clearly sending mixed signals, and investors would be wise to approach Oracle with a balanced perspective, considering both its long-term potential and the short-term technical challenges. But the story doesn't end with just stock analysis. Prepare yourself, because what's happening in the world of AI is about to take a dramatic turn. We're about to explore a major pullback in the AI trade and what it means for the future of artificial intelligence investments. AI trade faces a major downturn. Oracle leads the decline. In a significant development for the technology sector, the much-hyped artificial intelligence trade is experiencing a broad and sharp pullback, with major players like Oracle seeing substantial drops in their stock value. This market correction signals a potential shift in investor sentiment away from the AI boom, driven by a combination of factors including cautious guidance from key industry players and geopolitical influences. The current downturn is particularly notable as it affects a sector that has been a primary driver of market growth for an extended period. The AI Infrastructure Index, which tracks leading companies in the AI space, has seen its most significant daily decline since April, shedding 3.6% as of midday trading. This index includes prominent names such as Marvell Technology, Vistra, CoreWeave, Broadcom, and NVIDIA, indicating that the impact is widespread across the AI ecosystem. The broad-based nature of this decline suggests that the pullback is not isolated to a single company, but rather reflects a sector-wide reassessment by investors. Several key events appear to be contributing to this market recalibration. Soft third-quarter revenue guidance from chip designer Marvell Technology has cast a shadow over the semiconductor segment, a critical component of AI infrastructure. Marvell's outlook suggests potential headwinds for companies reliant on high-demand AI chips, raising concerns about future growth projections. Furthermore, China's intensified focus on achieving AI independence is another significant factor. As China aims to reduce its reliance on foreign technology, it could alter the global supply chain dynamics and impact the market share of companies that have benefited from Chinese demand. This confluence of events is prompting traders to reconsider their positions in AI-related stocks. The rapid ascent of AI investments in recent times had led some analysts to believe the sector might have become overvalued, creating an environment ripe for a correction. The current pullback could be seen as a market-driven recalibration, where investors are taking a more cautious approach, demanding clearer signs of sustained profitability and growth before committing further capital. The shift away from the AI trade suggests investors are seeking more tangible evidence of a company's ability to translate AI innovation into consistent financial returns. The implications of this downturn extend beyond just stock prices. It raises questions about the sustainability of the AI investment narrative and the pace at which AI technologies will be adopted and monetized across various industries. While the long-term potential of AI remains immense, this period of correction may force companies to focus more on profitability and practical application rather than speculative growth. Audience impact. This market movement is causing a stir among tech investors, with many expressing concern about the rapid shift in AI stock performance and seeking clarity on the underlying causes. Analysts are divided, with some predicting a short-term correction followed by a resurgence, while others believe this marks a more fundamental reevaluation of the AI sector's valuation. While the tech world grapples with the AI trade, a different kind of innovation is brewing as the U.S. government begins to embrace blockchain technology in a big way. We're diving into a groundbreaking initiative that could pave the way for new eras of government-backed blockchain adoption. Government embraces blockchain, Oracle tokens poised for new era of adoption. The U.S. government is making a significant stride into the blockchain space with its new on-chain data initiative, a move that is poised to usher in a new era of government-backed blockchain adoption and potentially elevate the status of specific blockchain tokens, including those associated with Oracle's ecosystem, such as PYTH. This initiative represents a pivotal moment where governmental bodies are actively exploring and integrating distributed ledger technology into their operations. The U.S. government's foray into on-chain data signifies a commitment to leveraging blockchain for enhanced transparency, security, and efficiency in managing public data. This could range from securing sensitive government records to enabling more transparent financial transactions and supply chain management. The adoption of blockchain by such a prominent entity could serve as a powerful endorsement, encouraging broader institutional acceptance and investment in the digital asset space. For Oracle tokens like PYTH, this development holds considerable promise. PYTH Network is a decentralized Oracle service that provides real-time, verifiable market data to smart contracts and decentralized applications. By aligning with government initiatives that require reliable and tamper-proof data feeds, PYTH could see its utility and demand surge. The government's need for accurate, on-chain data for various applications, from regulatory compliance to public record keeping, creates a natural synergy with Oracle services. If the U.S. government chooses to integrate PYTH or similar Oracle solutions into its data infrastructure, it would not only validate the technology, but also potentially drive significant adoption and value appreciation for the associated tokens. The implications of this initiative are far-reaching. It suggests a future where blockchain technology is not confined to the cryptocurrency realm, but becomes an integral part of governmental infrastructure. This could lead to a more efficient, secure, and transparent public sector, while also creating new economic opportunities within the digital asset ecosystem. The government's embrace of on-chain data could also spur the development of new standards and best practices for data management, further solidifying the role of blockchain in the digital age. Furthermore, this move by the U.S. government could set a precedent for other nations and public institutions worldwide. As governments increasingly recognize the transformative potential of blockchain, we can expect to see more such initiatives emerge, further driving the mainstream adoption of digital assets and decentralized technologies. The integration of blockchain into government operations signifies a maturation of the technology and its perceived reliability for critical infrastructure. Audience impact. The announcement has generated considerable buzz within the blockchain and cryptocurrency communities, with many hailing it as a landmark moment for digital asset adoption. Analysts are keenly observing how this initiative will be implemented and its potential impact on the broader market for Oracle services and government-regulated digital assets. As governments look to the future of data, another sector is seeing important amendments to agreements that could unlock significant value in a vital resource. We're now turning our attention to the world of commodities and a crucial royalty agreement update. CleanTech and Oracle amend royalty agreement for Illinois Fluorspar properties. In a strategic move set to bolster domestic supply chains for critical minerals, CleanTech Vanadium Mining Corp. And Oracle Commodity Holding Corp. Have officially amended their existing royalty agreement. This significant update now extends the terms to include the Pope Fluorspar properties located in Illinois, a development that could enhance the accessibility and production of fluorspar within the United States. The amendment, which took effect on August 27, 2025, introduces a new 2% net smelter return, NSR, royalty payable to Oracle. This royalty is subject to a minimum payment of $6 per ton of minerals sold, ensuring a baseline revenue stream for Oracle Commodity Holding Corp. Regardless of fluctuating market conditions. The inclusion of the Pope Fluorspar properties is particularly noteworthy. These properties encompass 15 mineral rights parcels, covering a substantial 970 acres, and are strategically situated within the Illinois-Kentucky Fluorspar District. This region carries historical significance as a major hub for fluorspar extraction and production, positioning the amended agreement at the heart of a key industrial area. Fluorspar is a vital industrial mineral with a wide array of applications, most notably in the production of aluminum, steel, and refrigerants. It is also a critical component in the manufacturing of high-performance ceramics, specialty glass, and certain types of chemicals. The United States has historically relied heavily on imports for its fluorspar needs, making domestic production increasingly important for economic security and industrial resilience. CleanTech's proactive step to expand its operations and secure these key properties, backed by Oracle's financial stake through the royalty agreement, is a significant move towards strengthening the U.S. position in the global fluorspar market. This amendment not only solidifies the partnership between CleanTech and Oracle, but also signals a broader trend towards revitalizing domestic mining and mineral processing capabilities. By leveraging the expertise and resources of both companies, the Pope Fluorspar properties are expected to contribute meaningfully to the U.S. Fluorspar supply. The strategic importance of Fluorspar cannot be overstated, especially as industries seek to reduce reliance on foreign sources and ensure stable access to essential raw materials. Flying Nickel Mining Corp., as a related entity, has also issued an announcement regarding this development, highlighting the collaborative nature of these resource ventures. The average trading volume for Flying Nickel Mining Corp. Stands at 344,677, indicating a degree of market interest in the company's activities. Furthermore, a technical sentiment signal for Flying Nickel Mining Corp. Is currently showing a buy, suggesting a positive outlook from a technical analysis perspective. This strategic expansion by cleantech, supported by Oracle, is likely to be viewed favorably by industry stakeholders and government agencies focused on securing critical mineral supplies. It represents a tangible effort to enhance domestic production capabilities in a sector vital for national economic and industrial interests. Audience impact. The announcement has been met with positive sentiment from industry analysts and stakeholders, who see it as a crucial step in bolstering domestic fluorspar production and reducing U.S. reliance on imports. The market reaction, as indicated by the buy signal for Flying Nickel Mining Corp., suggests investor optimism regarding the future prospects of these fluorspar assets. And that's a wrap on our deep dives for today, but don't go anywhere just yet. We've got a rapid-fire recap of all the top stories and a clear call to action to keep you plugged in. And that's a wrap on our deep dives for today. We covered Oracle's stock navigating mixed signals, the AI trade taking a significant hit, the U.S. government embracing blockchain with implications for Oracle tokens, and a crucial amendment to a royalty agreement in the commodities sector. Don't miss out on any future updates. Make sure to like this video, subscribe to Microsoft Sphere, and hit that notification bell so you're always in the loop. Ring that bell, and let us know in the comments what you think about these stories. You can also follow us on all our social media channels for more exclusive content. Thanks for watching, and we'll see you in the next one.